Let me now bring on board Manish Khanna, Senior Partner with Grant Thornton. Manish, good to have you back on ET Now. Thank you for joining us. Characterize the market environment for us. Things are choppy. Global growth scare is not over, but Indian markets are still outperforming global markets.
Morning. I guess where we're coming in from back of a period where we've had extremely bad news. We've had policy paralysis, and if ever there was an action on policy, it resulted in coming up with the most innovative way of how not to attract foreign investment. We've had high inflation, we've had Eurozone crisis, but I think if we take the last 2 weeks, we've got a new man in the corner office, so I think the expectation is high out there. We've had all the correct things being said on a lot of the negative policies, whether it was GAR, whether it was the Vodafone, which were coming out. And, as you know in the market, we've also got Germany being sidelined to some extent as far as the Eurozone is concerned, action out there. And we've had a substantial drop in the oil prices. So, as you know, markets are a combination, a heady mix of sentiment and fundamentals. So at least at this point of time, the sentiment is all right. Expectations are reasonably high in terms of the fact that, A, there will be no negative policies which would at least come out. Hopefully, the finance ministry will come out with positive action. And with the crude prices, let's say that they stay within the $80 to $100 range, then it will attract money into India, and which is again being shown in the 5-7% reflection in the rupee dollar price.
So are you cautiously bullish or are you bullish?
I think if you look at sentiment-wise, we are fine. Fundamental-wise, if you look at it, again at 5,300, 5,400 Nifty levels, then clearly in terms of the earnings, we may be, my view is that at this point of time we are fully priced. So what we need to see is an improvement in the earnings. And the earnings for a lot of companies have been substantially hit because demand offtake is not there. Foreign currency loans, foreign currency interest costs are hitting. There are a large number of companies which are highly leveraged. So I think I would be bullish if there is clearly policy initiatives which are taken, which get reflected in the earnings for the companies in India.
Manish, you've been reiterating to, expectations resurfacing when it comes to policy action. But what is it that the market is, watching out for? Is it opening up of FDI in retail, aviation? Because we've seen some clarity on at least the taxation part, the GAR issue actually come about. There are two elements to it. The first element clearly is that I think, are we going to have more of negative policies? Okay, and I think that seems to be put to rest. That at least right now, the government is not actively looking at coming out with negative foreign policies to towards foreign investment. The second part, I guess, the proof of the pudding will be, and how far does the economy go, will reflect on what is the extent of policy initiatives that the government can take to increase production, to increase investments, give out projects in terms of road, infrastructure projects, and make that easier. So I think now we've had this rally of 9-10% coming up from 4,700 to 5,300, and I think from here onwards we would be range bound for some time unless the government now comes up with positive policy initiatives to increase investments in the Indian economy.
What if we don't hear anything from the government? The news flow from New Delhi does not improve. Do you think we could go back to that hole of 4,800 on the Nifty?
Well, if I guess for 2 or 3 months, if we are going to continue to have bad news, inflation does not abate, crude prices, Iran crisis does not get resolved, and we have a high crude price. And at least this morning we've got rain in Bombay. If the monsoons don't come up, then clearly, yes,
we could fall back into that 4,600, 4,700 range.
Markets secretly are now worried about discretionary spending because inflation is high, base effect has kicked in. Indian consumers are now also, exhausted. Some of them are confused. Do you think the defensive trade or the consumer discretionary trade, which has been a resilient trade for the first half of this year, is now reversing, or if not reversing, is coming under threat?
Because, as I said, I think a lot depends on how the next 2 or 3 months play out. At Grant Thornton, we had an international survey of businesses which were done. We're just releasing the report today. And what we find is that there is an increasing confidence in people to look at the long term. And business people are believing that the worst is over. It is still not enough people are on the positive side, but what we are seeing is an increase, at least in the developing economies, in economies like India, where people are saying that yes, this was the worst and we need to look at the long-term effect. So I think a lot will depend really on how the next 3 months roll out. Are we going to have, interest rate reduction in 3 months' time? Is inflation going to go down? And we need those kind of positive triggers.
I was just coming to that, Manish. What is the market pricing in? Can we see a rate cut by the central bank this time, or do you think it is going to continue to maintain a status quo stance like they did the last time around?
I think, like I said, my personal view is that given the set of factors which are there currently, like I said, if a couple of these basic things fall in place, like policy action, inflation, drains, then we will see a rate cut or at least increase liquidity into the market.
What is the best way to make money in such an environment, Manish?
We said that we'll try and stay away from those kind of things. Like I said, I am still cautious in this market. I still don't think that we've crossed the hurdle. But I would say that maybe like I said, I'm re-emphasizing on that, but what I would expect from the government right now is policy initiatives. And then where there are policy initiatives, if it's power sector, then yes, because we are at all-time lows, we are at pretty much scraping the bottom of the barrel right now. But I think these are the kind of sectors that one could look at, whether it's power, infrastructure. Clearly, these are the sectors to look at, provided that there is a policy initiative. Otherwise, it is more sensible just to sit on the sidelines and watch.
Assuming that we get some policy initiatives in power space, in the infra space, what kind of run-up could we be staring at? Do you think power stocks could appreciate by 50% then?
That's a tough call. I won't be able to make it, and I don't think I have all the input points to be able to comment on that.
When you say markets are hungry for policy initiative, what could be some interesting and innovative policy initiatives? Increase government spending, clear linkages, or just make life simple for enterprise and just life makes simple for corporate India Inc.
I think what you are correct in saying. I think that there are a reasonable number of simple steps. The linkage. If you get the linkage in place, linkages in place, and yes, announcement or financial closure of a couple of infrastructure projects, that will give it the impetus. So I think that there are simple solutions to this. That there should be a desire that yes, we need to get couple of projects, infrastructure projects out of the way. We need to get the linkages in, and that is what will give the impetus. And like I said, it's a heady mix of sentiment and fundamentals. So if you have the fundamentals right, people then start taking risks and betting on futures and going that extra mile.
Will FDI and retail be a game changer?
I think per se, we need to have a more open and a more welcoming FDI policy. I do recognize that, we do have all these issues on retail, and also I won't just pin everything on FDI retail. What I would say is that we do need to have a more open and a more welcoming FDI policy.
What about currency? Now, the bulls are of the view that Indian currency at these levels is pricing in all the bad news, a virtual collapse of in the investment cycle. We have a virtual breakdown in the GDP growth and also poor IP data. The bears are of the view that this is just the beginning for the decline of Indian rupee, and in the near term rupee could even overshoot beyond 60. What is your assessment? 55 or 60?
I am, my personal view at this point of time is more on the 53, 57 kind of a range. I do believe that the Indian economy has significant challenges which it needs to address. And we would be on the better side of the rupee if we've addressed those challenges. I think the dollar will continue to be strong, irrespective of how the Eurozone plays out. I think, even at, we've been saying that, US is down to 2%, 2.25%, but that 2%, 2.25% growth rate is a very healthy growth rate. And we shouldn't be happy saying that, India has a 6.5%, 7% growth rate, and US just has a 2.5%. They are not comparable. That
it's a $13 trillion economy. We are what about 1 trillion?
I think that is very impressive. So I think the dollar will remain strong, and the response has to be the rupee. How strong can we be? And that is going to be, like I said, how far we are willing to go in terms of our policy initiatives.
So what about institutional inflows? Are FIIs still in the wait and watch, wait on the sideline kind of mood?
I think foreign money does want to bet on India. It's just that we make it so hard.
So what's the bottom line here? Time to break your fixed deposits, revisit equities, or still park some money in fixed deposits? Time to equities, the case to equities is there, but the time to buy Indian equities has not come yet.
Again, it's, what kind of an investor you are.
What are you doing? Let's say that.
But I am still on the wait and watch.
Does it make sense to buy fixed income products? Because if interest rates come down, debt market, at least short-term debt will do well?
Yeah. So I'm like I said, I'm more at this point of time more on the wait and watch. Yes, you may lose the the immediate upside on it, but maybe with old age one gets a little more cautious.
Wait and watch. I guess everybody is waiting and watching for some news flow from center as well. Manish, appreciate your time, and good to have you back on ET Now.
Thank you. Thanks.